Good morning, all. I'm Emmanuel Faber. I'm the chair of the International Sustainability Standards Board, and I'm honored and delighted to be offered this opportunity to start your day for this important annual event, the Conference of the Principles, organized by ICMA. This morning in Amsterdam. I would have loved to be able to join you, but I was in Amsterdam a week ago, and so I won't be able to be back here again. Maybe some of you have heard about our work, but let me start by sharing why it might be relevant for you to listen to me as you assemble for this important moment. The International Sustainability Standards Board's creation was announced at COP26 in November 2021 by the IFRS Foundation that, as you know, is covering accounting for about 140 different jurisdictions in the world, supported by and sponsored by, on the main stage of the COP, the IMF, the World Bank, the UN, the OECD, the Financial Stability Board, and a number of others, with a mission which is to finally make sense of the hundreds of ESG metrics that have been developed over the last 20 years, which in so many ways is and are those metrics an evidence that accounting is accounting for a lot of things, but does not account for everything that counts. Those voluntary standards, ratings, stars, colors, whatever you want to call them, are essentially existing because corporates are trying to say something, and investors and banks and lenders and capital providers are trying to grasp about what they mean, about issues that might be relevant for capital allocation, whether this is about equity or fixed income, when it comes to the volume and the price at which capital can be attributed. Basically, pricing in the market topics that the financial statements and even the financial reporting as a whole are not capturing today. So I was asked to chair the inaugural life of ISSB, and we started in 22. We issued a first set of standards, which is basically the general requirements, heavily borrowing from accounting in terms of language, grammar, syntax, algorithms, logic, concepts that are heavily borrowing from the IFRS accounting world, so that we speak a language that ultimately you will be speaking in your decision making, that companies, CFOs, CEOs will use when they are making strategic decisions, budget allocations, investments, acquisitions, when they are measuring their risks in their risk mappings, when their boards are overseeing the accounts and whether they deliver a fair presentation of the companies and its prospects. And so that's the first layer. The second layer that we've added is a climate standard, which is very comprehensive, that captures both climate physical risks and climate transition risks. This applies to the general requirement standards that basically requires companies, when they report to their investors and lenders, to report about all the sustainability risks and opportunities that are in the horizon of space in their value chains, suppliers, farmers, water issues somewhere else, social issues somewhere else, and in the downstream part of it, logistics and many others, up to the end cycle and sometimes the circular cycle of their business model. So opening space. And second, opening the horizon of time. You should report, if you report with the ISSB standards, on the short, the mid, and the long term, which allows, in particular for fixed income investors, to look at the longer term risks measurements, because, and in particular, we connect the two by requesting that the financial effects, current and anticipated, of those sustainability risks and opportunities need to be reported. And so you have a language of sustainability with that is directly connected to the financial statements. So we issued these first two standards, IFRS Sustainability 1, IFRS Sustainability 2, in June last year. In about a year, it took us about a year's time to develop. 1 month later, the Financial Stability Board decided to retire their TCFD framework into us. So we added more to the consolidation of the frameworks. And 15 days after that, the ISSB endorsed the standard. ISSB is the membership organization that gathers about 130 market regulators around the world, covering about 95% of capital markets around the globe. And they declared our standards fit for purpose, the same way they had declared 20 years before the IFRS first standards fit for purpose, before they became, after 25 years, the global reference, as I just mentioned before. So we are at this early part of the journey. Interestingly, I would like to say that we are about 10 months after this endorsement. And at the annual general meeting of ISSB a few weeks ago in Athens, we were able, in a joint press conference with the chair of ISSB, to take a first global stock take at the adoption of our standards. They are today referenced in 20 jurisdictions, a bit more than 20, which have committed publicly and have started to take steps for the full alignment with our standards, in addition to their accounting standards. So basically adding the ISSB standards into their regulatory framework in a given period of time. That can be 24, that can be 25, 26, 27 even. Those 20 jurisdictions account for roughly 50% of global GDP. 50% of the global economy has a target to adopt or develop standards that are going to produce functionally aligned outcomes in terms of the reporting and the information that will be given for decisions by investors in half of the global GDP, also covering half of the global greenhouse gas emissions. The uptake is frankly beyond imagination. I would have never thought that after 2 years of existence, not even 1 year of the standards being finalized, ISSB's endorsement, that we would be there. But that's where we are. That includes an interoperability system with the EU. You will hear more about the CSRD, I guess, from a parliament member in the evolution of the political context here in EU. But we have secured an interoperability agreement between the very ambitious project of Europe and the global project that we are covering, in which there is a very, very high level of alignment on climate in particular. That also includes China, that most recently, last month, came forcefully in declaring that their corporate reporting on sustainability will be based on ISSB standards, but another 20 jurisdictions around the world. And interestingly, a number of global south, Nigeria, Costa Rica, Bangladesh, Sri Lanka, and others, which means it's not only something for a few G20 countries. It's really something that is proportionate and available to build competitive advantages for corporates, for portfolios, investors, for even countries, by highlighting and using, adding to the mix of decision tools, those elements of sustainability that are material to the business models or to the macroeconomic models of countries. And to that end, I'd add that the Basel Committee has decided to use our climate standards for their Pillar 3 work on climate, as well as the ISSB. And some of you may be building also sovereign debt portfolios, of course, and sovereign debt is a huge part of the global listed debt, as you know better than I do. And so the International Public Sector Accounting Standards Board have decided to also use our standards to do this. So there is a systemic effect, and we are trying to build infrastructure that will be helpful for you in making your decisions. In a nutshell, I think there is a global tendency to believe that what we do is good for equity. But as you know very well, as fixed income investors, most of what is relevant for equity is also relevant for fixed income, whether listed or actually private, one way or the other, because there is a risk-return assessment. And we provide much more color to complex issues that are de facto affecting the prospects and therefore the returns and the risks appreciation by investors, whatever the nature of their investment. So enhanced risk assessment, informed investment decisions, much more informed. Facilitation, I would say, also of benchmarking and comparison. I've been speaking, and I speak to a lot of fixed income investors, and in particular those like you that are interested in and pioneering in this super critical area of sustainable bonds and green bonds. There is a tremendous lack of understanding of what is the impact or the economic traduction of impact of those bonds, and therefore the ability to differentiate one from the other is really complex. We are bringing clarity to that, and so hopefully we'll make your work more strategically and laser focused on what you actually believe you want to have in terms of impact in your portfolio as well. And I'd end with I think an important aspect by saying that that will provide issuer engagement. And I can tell you from the other side, as you know, I didn't say, but I've been the chair and the CEO and the CFO of a very large company, and actually two of them for like 25 years. So I've been reporting to people like you every quarter for 20 years. And I know what it takes when you report and you want to speak about something that is important for you and you don't have the language. So this is what we're providing, this ability to engage, and therefore, hopefully, that thanks to your efforts, maybe supported by our tools, there will be a gradual transition being created towards allocation that is desperately needed of capital to more resilient business models, again, macro or micro. And let me finish by saying that the 5 trillion of money that the principles represent is an unparalleled support to the transition. The challenge is obviously that the debt market listed is 4 times or 3 times bigger than equity. And so what you do is seminal work. And what we are trying to do is that your work is being made easier, and that ultimately that will become mainstream. So that is in a way my way of concluding. Has been too long on why this is so important, in particular in these turbulent political times, that the market is actually grasping and building its tools that will go beyond the political consensus, in particular when it comes to the adaptation for a just transition. So thank you for having me, and I wish you all a very successful conference today. Thank you.